A majority of the day, we saw stocks struggling out there, and the NASDAQ has the potential to form this hanging man candle. However, I want to warn you guys, stocks tomorrow have a 60% chance of doing this one thing. Now, we're probably going to start seeing a lot of headlines like this. Stock market today, S&P 500 scores a record close. Dow flat, NASDAQ ekes out a gain. We come over and look at the fear and greed index. Right now, we can see we're almost dead smack in the neutral. Are we about to see greed in the very near future? Then as we come over and look at how the indices fared across the board, the Dow was up 10 points, NASDAQ up 14 points, S&P 500 up 14 points, and the Russell 2000 up 1.27. Now, when we look at advancing issues versus declining, we had 54.6% of issues advancing on the day. Then as we come over and look at the sectors across the board, the big laggard out there today, communication services. The leader out there was energy, followed by basic materials. Now, something that we picked up early on in the session, and we talked about this today on the live stream. This morning at the beginning of the stream, we saw the dollar index was actually up for the session, but then we came over and we looked at gold. Gold was also rocketing up. Gold was up 52 points on the session. We look at gold on daily chart, looks like it's getting ready for another new all-time high. Also in pre-market, we saw the SPY gapping up near all-time highs. However, this morning at the same time, we saw the volatility index was actually green. You can see that last night when it opened up around 3:15 in the morning, it was already up. And then going into the open, it was gapping up again. And I said, and I warned everybody on the stream, hold up, there is something going on. There is an anomaly out here that we need to pay very close attention to. Then what do we see? We saw the NASDAQ come tumbling down, taking out that point of control. Now, one of the trades that we talked about today on the live stream was the fact that we had a double top on the NASDAQ. Top number one, top number two. And when we look for the price projection out here, we had a price projection only at 22,205. However, the market was a bit of an overachiever. Now, to remind you guys, this stat that we talked about in this weekend's video on Sunday, and it basically laid out the framework that the Tuesday after President's Day, historically, going back more than 30 years in the past, that the S&P 500 has only been up 51% of the time on Tuesday after President's Day. However, look at Wednesday. On Wednesday, the S&P 500 has only been up 40% of the time, which means there's a 60% chance tomorrow is going to be a down day for the S&P 500. Now, when we look at what could cause the volatility out here for us tomorrow, we come over and look at the economic calendar. We can see on Wednesday, 8:30 a.m., we have building permits, we have housing starts, but then at 2 p.m., we have the FOMC meeting minutes. However, could the volatility actually start before then? Because let's not forget, President Trump and Elon Musk is going to be having an interview with Sean Hannity at 9 p.m. tonight. So if you guys are planning to trade the Asia session, watch out. There could be plenty of volatility out there tonight. Now, something we want to pay attention to, we know the dollar index slightly up today. And then we come over, we start looking, let's say the 10-year yield. 10-year yield trying to get its way back up. And we could also be having a little A to B equals C to D pattern on the way up. We go something like this, the A to B leg, the B to C leg, and we project right up here, which would bring the 10-year yield up to about 4.7%. So what would drive yields up? Trump has already said he wants to get yields lower. That way it's a lot cheaper to service the U.S. debt. We come over and look at the Fed watch tool. We see there's 28 more days until the next FOMC meeting, and there's a 97% chance the Fed is going to be doing nothing at the next meeting. We come over and look at the probabilities real quick, and we can see the market right now is not pricing in a rate cut going all the way in the future until September. And we're going to see, does that change? Does that interest rate cut get pushed even further back? Now, as we come over and look at the SPY having a hammerish looking candle at the top right here near all-time highs. Is this a warning sign? Are we getting ready to come back a little bit lower? One thing I want you guys to keep an eye on is the fact that we have two A to B equals C to D patterns out here for the SPY. The first one, we have a price projection right up here about 616.12. Then let's not forget, we have this larger ABC pattern in play. We measure the A to B leg, the B to C leg, and we can see that projects all the way up here to about 626.15. So we want to keep our eye on that. On the daily chart, we see the MACD indicator does have a cross to the upside. On the 4-hour chart, trying to cross to the upside, but one thing to note, as the market is coming up, making new all-time highs, look how much lower the MACD indicator is. It's showing us the momentum behind the push just simply is not there here at this moment. Then we jump over and look at the 30-minute chart and notice what we did all day long. basically consolidated all day long. MACD indicator working its way a little bit lower. Then right at the very end, we get that push up the last half hour of the day, which was enough to make another new all-time high. Now, if you look at today's range, compare it to what we saw on Friday. We made a higher high than Friday. We made a lower low than Friday as well. So are we getting ready to go ahead and run up and hit that ABC projection to the upside? Now, I want to remind everybody right now, Apex having an 80% sale off all their evaluation accounts, passing as little as 1 day, and the sale ends tomorrow. So if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, when we come over and look at the futures markets real quick, we look at the 4-hour chart. You can see today we came right down, spiking into this high volume node, got a little bit lower than that area, and we were still unable to take out that untested value area high at 6112.50. Now, that still is going to be a high probability target for either this week or potentially next week. And let's not forget, down below that, we also have a point of control about 6,088. As we come over and start looking at the 30-minute profiles real quick, notice we finally came back and repaired some of these structure points that we talked about this morning on the live stream. So now that we're able to come up as far as we did, are we all in the clear now? Is it a sign that S&P 500 is going to go ahead and continue to rally up? Well, again, we got to remind ourselves tonight, Trump and Elon is going to be having an interview with Hannity, which could bring a little volatility to the market. And tomorrow, we also have the FOMC coming out. Notice what we did today. We closed higher than value area high, which means that tomorrow or the following day, where it's highly probable, we're going to come back and test value area high, which comes in at 6142.00. If we break below that, I want to turn my attention down here towards the point of control, 6132.5, and then down here towards value area low at about 6129. Anything below 6129, I then want to zoom the chart out a bit. And I do want to pay attention to the untested value area high out here from February 13th, along with that point of control down here at 6103.75. However, I do want to caution you guys if you guys are looking at these lower price targets, because as you can see, we've had a push up and now we have an upper level consolidation. Higher level consolidations usually lead to higher prices. Lower level consolidations usually lead to lower prices. So we got to be very vigilant. Are we getting ready for another move higher? Because we do have another untested point of control right up here about 6,164.25. Now we come over and look at the QQQs real quick. Notice we have that hanging man-ish looking candle. And again, it's the weakest of all reversal patterns. We do have a larger ABC pattern in play up here to about 543.93, but we also have this smaller ABC pattern right here. The A to B leg, the B to C leg is a corrective leg, and that will also complete very close near the other ABC pattern right here, about 543.12. MACD indicator is crossed to the upside, but notice price is pushed up higher, but the MACD indicator simply has not been able to push up higher at this moment, letting us know that the momentum just simply is not behind the move at this moment. On the 4-hour chart, MACD indicator is crossed to the upside. But then when we look at the 30-minute chart, notice what we did today. We started to roll over here just a bit, but the market did not. Again, we have upper level consolidation, and anytime we have an upper level consolidation, expect highly probable we're going to go ahead and rocket back up to the upside. Now, the question is, will this end up being nothing more than a trap? I'm going to still classify today's profile shape as a D as in dog, which means the first way we break quite often ends up being nothing more than a trap. Now, we talk about this concept quite a bit on the live streams. And if you want to make sure you don't miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. Then as we come over and start looking at the NASDAQ on the weekly volume profile charts, notice what we've done today. All right, we've pushed away from this point of control at 22,301.5. However, we did not push down far enough to test last week's value area high. So for me, this runner target is still going to be in play, and we'll see. Can we make it all the way down here towards 21,790.50? Then as we come over and start looking at the daily profiles real quick, notice we kind of had a double bottom pattern down here late in the day. The second wick basically flushed out the week longs and then simply rocketed on the way up. Also enticed new short traders playing the breakout, wrecked the short traders, wrecked the week longs, and then rocketed right back up. Now, one of the areas I want to talk about to the upside is going to be this minus development area, which is right along the swing points right up here. Now, I like to zone this area out, candle wick to the candle body, and that's going to be a zone anywhere from 22,263.5 up here to about 22,272.75. This, to me, is a logical target to the upside. However, we do got to be cautious as well, because if we pull a fib from the swing high down to the swing low. Notice right where we came up to this afternoon, right near the 61.8 Fibonacci level. This is the area where we can see the market start to turn back down. And if that is going to be the case, that could set up an ABC pattern to the downside. And that would come something like this: A to B equals C to D with a price projection at about 22,033. And keep in mind, that's not that far away from that untested value area high out here from last week's volume profile. So again, I want to be very vigilant. I want to see, do we get the signs that this is going to be the high and we start to roll over? Now, if we do push a little bit higher, then we'd essentially have to recalibrate or redraw the Fibonacci extension level. So we got to wait until the turn is in place before we can get an accurate target to the downside. And keep in mind, with the ETFs pushing to new all-time highs, we could be getting ready for another new all-time high tomorrow. Now, if you want to learn about when you can take withdrawals from Take Profit Trader, make sure to watch this video right here.